Hi, welcome back. You're watching MF Corner, and joining in now we have Harshvardhan Roongta of Roongta Securities, who's going to talk about what should be the strategy for passive investing in your portfolio currently. Harshvardhan, good afternoon. Thanks very much for joining in. So tell us, for a retail investor, where do index funds or ETFs figure in their investment priority at the moment?
Well, Sumera, this is an area of discussion which has been continuously progressing over the time. Now, let me give you an example. In the developed markets that we're talking about, I mean, we're talking about the US and of the developed markets. The ETFs, passive investing, index funds, these are very, very popular. As the markets mature, as the information dissemination becomes more and more efficient, even our market, the Indian market also will eventually head into this direction. So, the idea is simple. If you are creating a portfolio for yourself, just make sure that you have an eye on the fact that is your fund, if you are investing in actively managed fund, is your fund manager able to beat the index in a very, very convincing manner? If not, then of course you will have to start looking at the index funds or the ETFs or any of the passively managed funds that we're talking about and make it as a part of your portfolio. At this juncture, as a part of our recommendation, we usually recommend our investors to allocate about 25% into passively managed funds. So that's about 1/4 of the investment amount that they're looking to invest into right now.
Okay, but Harsh, how has the performance been for active funds vis-a-vis index funds, ETFs?
So if you were to take some numbers which I have these which you try and collate together. So if you just take the large cap fund category, so that's one of the categories which obviously we talk about to be the core part of the portfolio. So if you're looking at the large cap category and benchmark that to the index which is the Nifty 50 or the Sensex 30. So in that case, we just picked up about the top 6 funds in the large cap category, which manage in excess of 10,000 crores each. So the AUM for each of these funds is in excess of 10,000 crores. So we came across 6 funds in this category which manage 10,000 crores and above. Collectively, these 6 funds, the large cap funds, actively managed large cap funds, manage about 1 lakh crore of AUM. Now, this 1 lakh crore of AUM is about 15% of the total equity AUM of the mutual fund industry. If we were to look at the performance in comparison to the Sensex 30, we noticed that in a 1-year time horizon, only 13% of this AUM, so only about 13,000 crores worth of AUM out of this 1 lakh crore that we're talking about, was able to beat the benchmark, which is Sensex 30 that we took. If you look at a 3-year tenure, even then, it was only this 13,000 crores which was able to beat the benchmark. We looked at a 5-year tenure, and in a 5-year tenure, we had about 28%, so about 28,000 crores worth of AUM against the 1 lakh crore that we're considering right now, the top 6 funds managing more than 10,000 crores each. Only 28% of the AUM was able to beat the benchmark. Now, if you look at about a 10-year horizon, we extend this to 10 years in time horizon, then about 49% was able to beat the benchmark, which is the Sensex 30 that we were talking about. So it was, it's kindly, we kind of can conclude on this part that over a period of even 10 years, less than 50% of the actively managed funds have been able to beat the benchmark. So as I mentioned, eventually we will all move towards this mature market scenario, information dissemination becoming very, very efficient. So going further, we will see it will become increasingly difficult for actively managed funds to beat the benchmark.
That's true. But Harshvardhan, if you look at any index fund which is tracking the same index, are they all created equal? Is it just marketing that some AMCs manage to collect larger assets to manage than others? Or is there any factors that differentiate an index fund from another? Is there really something like a tracking error or higher expenses or some such?
Yeah, so you have various fund houses now who are very actively looking at introducing passive funds. So we're very serious about this because eventually, as I've been saying continuously, that it is a matter of time. It is a couple of years away when we will see investors also becoming extremely aware of this fact and looking at index funds. So the differentiating factor. So we have almost every fund house today offering at least one passively managed fund. Now the differentiating factor would be, so we're looking at if two fund houses or two different schemes are tracking themselves to the Sensex 30, the composition of both the schemes will be the same. So there is no discussion on that part. Yes, they would. What you need to look at as an investor is, of course, how much is the expense ratio, because these are passively managed. There is no involvement of the fund manager or the research team of the asset management company. So yes, the expense ratio is one of the factors. The other is a tracking error. So the lower the expense ratio and the tracking error, the better the fund is supposed to be. Now, if the AUM, if you look at and compare two funds in terms of the AUM that they manage, so primarily speaking, there should not be much of a difference if there is an AUM of say about 100 crores and there's another fund which has an AUM of 5,000 crores. So there would be a minor impact on the tracking error for a fund which has a lower AUM, but that does not mean that it is not something that you should subscribe to. If its expense ratio is lower, then most certainly you can go ahead and invest into a fund which has a lower tracking error and an expense ratio. So that needs to be kept in mind.
All right, Harsh, we're out of time, but thanks very much for joining in and explaining it to us. So like Harsh says, that the passive portfolio in your overall portfolio can be about a quarter or 25%. With that, we'll wrap up on today's edition of MF Corner. Do stay tuned, and the market action continues with closing bell.